Right, Netflix. It's that time of the quarter then, and the stuff that we've been watching on Netflix. It's the first time for Netflix that they have not included subscriber numbers in their earnings quarterly report. That was entirely forecast, entirely predicted, very well telegraphed ahead, so it's not a big surprise. And my view on this has kind of changed a little bit as to whether I think this is good, bad, welcome, indifferent, otherwise. But we'll come back to that in a bit. Aside from that, I think it's a very strong quarter from Netflix. So revenues were 10.54 billion, which is up 13% year over year. They're guiding for even more in Q2, which is actually Q2, unusually for these US companies, but they're looking for 11 and a little bit billion, which is higher than expected. Full year guidance of between 43.5 and 44.5 billion, which, if you think they're kind of so far looking at 10.5, that probably implies either some rapid growth or some fairly consistent growth throughout the year. That's got to go higher in the remaining three quarters to get them to that. But earnings per share were $6.61, which was 25% higher. They, as they generally do, mentioned some of their big hits, which have been Adolescence, which I had heard of, Back in Action, which I had not, Ad Victoriam, which was one I hadn't looked at either, and Counterattack, which I also had not. We'll get on to what I've been looking at on Netflix, because I've been watching quite a lot of Netflix recently, but before we do that, operating margins were really quite high, and this is kind of a running theme a little bit for their report. They were 31.7%, which was up from 28.1%. That's a little bit due to timing on stuff like content spend. There's more of that coming later in the year, so they sort of guide for that to come down a little bit, but they are showing very strong growth from what they see of it in their ad division, and we have seen in more places than we can begin to name now, Steve, that a growing ad business is a powerful high margin profit vehicle, especially if you have a plausible platform to put that ad business on, and Netflix probably does. I thought this looked very strong. We'll come back to the lack of kind of subscriber numbers in a moment, but what have you been watching on Netflix?
So the couple of things that I've been catching up on that I missed the last season of, none of them are going to particularly blow your socks, I wouldn't imagine, Steve, but I've been watching the last season of Rick and Morty. Keen-eyed viewers will have seen my Mr. Meeseeks mug from time to time while I'm when we're recording. And the other thing I've been catching up on, because there's a new season coming, is Love, Death and Robots. I don't know if you've seen that, Steve, but that is a series of really, really good short stories. Now, some of them might only be a couple of minutes long, some of them might be 12 minutes long, but they're incredible little pieces of art. And, and if you don't like it, it never really lasts that long. But yeah, it's critically acclaimed. The scores on IMDb are out of this world, and it's really, really enjoyable to watch. And there's a new season coming, so I thought I'd just do a little refresher on that. Rick and Morty is a bit of a go-to. It's a bit of my bit of guilty pleasure just to leave that running in the background while I'm doing something else as well. So, but other than that, Steve, I've watched. I've cheated on Netflix on Prime. Clarkson's Farm I've watched from start to finish, and it's very, very, very good, very funny. And I've just started Daredevil on Disney Plus, the new season, because I've seen all the other seasons, and that is like Disney have forgotten their Disney. I mean, we're talking about people's arms being snapped in fights, like into the camera. At one point, he trips up this cop and grabs him by his tie in midair and pulls him down, so he lands headfirst onto the concrete rather than a different way. And you're like, holy gosh, this is Disney, and they've allowed this to happen. Do you know what I mean? Like, this is it blew my mind how incredible that is. But back to Netflix and away from my excitement, a couple of things jumped out to me in this report, Steve. It was that promise of, or the guide of $8 billion of free cash flow on the year. It was like just continuing to see the sort of power of Netflix's cash generation, but also just the fact that the geography, the stats were incredible. So, I mean, they're growing everywhere that they show Netflix at the moment. UCAN up 9%, EMEA up 15%, Latin America up 8%, Asia Pacific up 23%. It's kind of incredible to see that. Often you look down those lists and see, one of them is slipping, or it's losing, or it's not doing very well, and Netflix just seems to be smashing it out the park absolutely everywhere. And it's not just that; they're promising more growth in revenue, more growth in EBIT, more growth in net income, and not just on the next quarter, on the full year as well. So, remarks in the call about retention and member growth, retention being strong, member growth being good. If I was a Netflix shareholder, and I kind of wish I still was, Steve, I think I would be quite happy to sit on these for another few quarters.
I'm not a Netflix shareholder, but one of my godsons now is. It's that time of the year where basically actually both my godsons have their birthdays within about a month of each other. And I've sorted one of them out with Netflix, and another one still working out exactly what he's into because I don't know him as well. But he's congratulations to him having a good time with Netflix here. So I'm in two minds about the not posting subscriber numbers anymore. I get it. This is now not a subscriber growth story in the way that it was before. This is now a financial story. So they focus on their financial numbers. I mean, I could compare this, I guess, and it wouldn't be a particularly fair comparison, but here's a general thought I have of here's an unspecified FTSE 100 company for you that I'll tell you their revenues for. So because it's FTSE 100, these are for the half in each case rather than quarters. But here's the last five halves in terms of revenue and operating income for you. They went 2.84 billion, 2.84 billion, 3.1 billion, 3 billion, 3.1 billion on the revenue line. And operating income went 795 million, 750 million, 944 million, 831 million, 1.09 billion. So generally speaking, their second half is slightly below their first half, but they are moving higher each time. And if I just looked at those financial numbers by themselves, I would say looks pretty good. Stuff is working higher. There's a little bit of seasonality, but you can live with seasonality in a business. I imagine there might be in Netflix too. But the business is BT, and this is their OpenReach set of revenues. And when you look at their total lines that they have, they've gone from, this is again in million or so, but 24.2 to 23.9 to 23.4 to 22.9 to 22.3. Point is, all their customers are leaving. And they are holding their revenues up pretty well by increasing prices on the ones that are staying. But with that particular story, that's going to end suddenly and quickly, right? They're not going to get down to eventually having one subscriber or one connection that is busy generating 3.5 billion for them. Sooner or later, people will leave in droves if they keep increasing prices like this. And the only way I could know that, I think, is because they do report, a fair play to them, to be honest, because they're not good numbers. They do report the number of connections and physical lines that they have in this part of their business. And if they didn't have that, I think I would look at this and think it was okay. Netflix is a different story in that I don't think their member growth is going backwards, but they're pushing prices to cover it or anything like that. But I think it makes it a little bit tricky for me to work out. The kind of theory that I have with them is I think these are going to actually be pretty resilient. There was a lot of talk when we first started, including from us, when there were four of us on this show, of what happens to people's Netflix subscriptions when things get a bit, or really, tight. Are people going to start pulling back on what is effectively discretionary TV spending? And the answer seems to be no, they're not. And I'm increasingly convinced the answer is no. Or they might do, but not on Netflix, put it that way. Netflix is going to be the thing that they hang on to. And I think I like that, but I would still like to have seen membership numbers, even if membership numbers are not growing particularly. I'd like to see them sort of just remaining resilient and staying where they are. So I think I missed that. I didn't care at the time when they announced that they were going to stop reporting these things, but now that I'm getting used to a world without Netflix subscriber numbers, I sort of wish I had them.
It's definitely a risk, isn't it, that's been added to the business, but I'm not sure at the moment we need to be particularly worried about that. They said in the call, Steve, that their aim is to become one of those businesses that are in the $1 trillion club by 2030. So they must have some decent sized plans ahead to achieve that goal. So I mean, I don't really understand why they're not reporting the subscribers, and I wonder if it's just to avoid that kind of dip they had in 2021 when subscribers slowed for a brief period of time and they fell like 72% or something like that in a short space of time. I wonder if they're Probably for their scheduled selling, Steve, it's good for them if that doesn't happen. So maybe if you, just hide that little bit of information, which was the key bit of information that people overreacted on, was the subscribers dropping a little bit, because actually the revenue and profitability was largely similar. So yeah, I think that's probably the reason they're doing it. But there's no alarm bells here for me, really. Also, if I would describe it as a mildly amber flag, I guess. It is something to think about. But I don't see it as anything to particularly worry about. On the flip side of that, Steve, I probably won't be buying it here. I think it's pretty expensive looking. I think it's probably one of the best businesses around at the moment. And it certainly has the best management team, or one of the best management teams. They always seem to, skate where the puck's going, kind of thing. So, but it's priced like it's priced like they're going to do that, Steve. So, it's like perennially on my watch list. If we get another 70% fall against Steve, I'll have to buy it. But I can't see that coming anytime soon.
Nor can I, and I think it's a non-trivial good thing about them that they did actually offer some guidance for the next quarter and reiterated their guidance for the rest of the year. I think a few people have been saying, I think they're right, that we're going to see quite a lot of companies pulling in guidance, as in just withdrawing it outright for the rest of the year. And I think in a lot of cases, it's going to be hard to blame them. They will be genuinely, I mean, in the time we've been away, tariffs have been on again to off again to part way in between again. And I don't know how anyone is supposed to, well, how some businesses certainly are supposed to offer meaningful guidance about that. I'm not sure how NVIDIA is, for instance. They seem to have quite a lot in going on in terms of moving targets and shifting goalposts and so on. And it's hard for me to figure out how they're supposed to know how much money they're going to make this year as a result, because a lot depends on what happens with tariffs in the next 6 months of the year, and nobody knows that. Asking them to forecast that's going to be nearly impossible. So, I mean, non-trivial point though, Netflix, I wouldn't expect them to be a hugely tariff hit business for what that's worth. I think for them, the risk that comes from tariffs is a general inflation risk, which is to be taken seriously if people's budgets get stretched by inflation. And like we said, they are discretionary. But I do think it's a strong feature of their business that they offered guidance and actually came in ahead of expectations with guidance. And we will see kind of where that takes them. Like you, I think they're a terrific organisation. I greatly regret not buying and holding a little while ago, but I wasn't quite in a position, I think, to appreciate what they had going on there. They look much more resilient and much more quote-unquote defensive than I think they were given credit for, including by me, over the last few. Should we look somewhere else?
Just before we do, I was going to say one of the things I think that made them so resilient up until this point is the fact that they were like £7 or something like that, £5 or £7 for the service. The problem I think you've got is the more you crank up the price, the more people put it on the list of things that potentially they should cut. When household bills tighten up. So that I think is a genuine worry for Netflix. I always said that was the game plan, Steve. I always said there were frog boilers on this show. The aim was to get people in, as many people in as possible, at $6.99 or whatever, or $5.99, and then just slowly crank up the price. Which is essentially what they've done, but they've also been able to attract new subscribers as they've gone along. But it'll be interesting to see now, because Netflix is it like 17 or 18 quid now? It's a bit more expensive than it used to be for a couple of screens and the high definition version. So it'll be interesting to see how people react now that it's a bit more out of the budget than it used to be. For the record, I still think it's incredible value. Somebody who's had Sky for such a long period of time. I just got rid of the basic version of Sky, which was costing me £30 and had absolutely no channels. So Netflix offers incredible value over it. And to be fair, I still think Disney and Prime do as well. But yeah, the more that price goes up, the more that flag changes, from a green flag to maybe an amber flag, and then maybe to an actual risk. So
You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.